All right, good morning, class. We're going to start off this morning, starting right off where we left off, which is going to be slide number 6. Um, I promise I won't have my dog sitting there panting in the background as I listen to the video. The other day, I realized that my dog was outside running around and sitting next to me as I was recording. And that's what the panting you heard in the background of that last video was. I think the worst thing that'll happen this morning as I record this video is maybe my cat will be jumping up here on my desk and trying to get in the picture as she usually does. But we're going to continue with slide number 6, which is the chapter 1 PowerPoint, part number 2. It's going to be slide number 6, and we're going to start off right with the income statement. Now, the reason I stopped the video where I did was because I needed you guys to understand the order and preparation of these financial statements. It's very important that you realize that we start with the income statement and we move on to the other two statements. If you do not complete them in the proper order, you're not going to be able to complete them properly. So you're going to get wrong numbers and things will be incorrect. So please make sure that you understand that we have to complete these in the proper order. So the first one that you're going to be completing now, slide 6 and slide 7 go hand in hand. And what I mean by that is if you take a look at slide 7 quickly before I start on slide 6, you're going to see an example, a template, as you will, of what you're going to be producing. Okay, so this is what your income statement right now, your basic income statement should look like. You should have your company name at the top. You should have your statement number, or excuse me, your statement name below. And then below that, you will have a date. Now, the date is important because 2 of the 3 financial statements you're going to be preparing will have the same date, the same way it's written. So for instance, as you see here, you'll see on the income statement example or exhibit 1, it says for the year ending. Okay. Now, the other part I want to point out to you just looking at this template is you can see that there are only 2 types of accounts on here. Those are your revenue and expenses. So I want you guys to be a little mobile here, and I want you to jump back up to slide number 5 really quickly and take a look at the order of preparation. And I told you guys you're going to go from the bottom up, meaning you're going to start at the expenses and your revenue. Now, if you look at your Ausdre there, your revenue and expenses have 2 arrows pointing to your income statement. So the only types of accounts that you will find on your income statement are going to be your revenue and expense accounts. You will not find your asset accounts on there. Okay, so please understand the whole purpose of the classification prior to doing statements is important because you do not want to put the wrong account on the wrong financial statement. If you do so, it's going to mess your numbers up and it's going to mess everything up. The one nice thing about doing these financial statements is you're going to prepare the income statement, you're going to prepare the retained earnings, and then you're going to prepare the balance sheet. When you're done with your balance sheet, the word balance means it has to balance. So you're going to see at the end of preparation that all 3 of these statements are correct as long as your balance sheet is correct for the most part. There may be some minor differences or minor miscalculations that may fall in. But for the most part, when you're done preparing your balance sheet, which is the last one you prepare, it should balance. And if it balances, chances are you've done it completely correct. Okay, so let's move forward. Let's go to slide number 6, and I'm just going to give you some background about the income statement before we move forward. The income statement is a statement that summarizes the revenue earned, okay, or your sales, and your expenses, meaning money that you paid out over an accounting period. Now, the over the accounting period is important because if you look at your template, which is the exhibit on slide 7, it's over an accounting period. This accounting period that you see on exhibit 1 is for the year ending. Okay, you can see it says for the year ending December 31st. So that means it started January 1st through December 31st. So that is a whole year income statement. Now, income statements can be prepared for quarters, meaning every 3 months. Income statements can be prepared every half year. It could be prepared every month. It could be prepared for the week. Just understand that the time period could change, but for our purposes in this class, we're solely going to be doing for the year ending. Okay? So back to slide 6. So the first part of that talks about summarizing or just totaling your sales and expenses over the accounting period, which in this case will be a year. The next thing the income statement does is it shows whether the company achieved its profitability goal. That just simply means that if the company made money or not. Okay, for those of you that want to go into business for yourselves at some point, the reason you want to go into business for yourself is to make money. Nobody goes into business to lose money. So this is the statement that will tell you, okay, yes, I made money, or B, I lost my shirt and I need to find a new job. Okay, so this statement is key. It is a statement that investors use all the time on Wall Street to figure out if a company or stock is a good buy or not to buy, to be perfectly honest with you. The last part of the income statement talks about if revenue or sales is greater than the expenses, meaning you made more money than you paid out, you have what we call net income. Net income is the goal of every company. Okay, having a net income or income after the expenses are taken away is what you want. So let's say you are throwing a party. Not really. Hopefully none of you guys are throwing a party during this time. But let's say you're throwing a house party, okay? And you spend $300 on beer. You charge $5 to get in the door. All right? So at the end of the night, when everybody leaves and somebody has the unfortunate job of cleaning up the house, or you pay somebody to clean the house, let's say you made $600 and then you paid $300 for beer and you paid $100 to somebody to come in and clean the house. Your total expenses was $400. You have the $600 profit. You spent $600 sales. You spent $400 in expenses between supplies, which is your beer, and $100 for the cleaning person to come in and clean the house after the party. So your net income for that particular party would be $200. You made $200, okay? The other thing that can happen on an income statement is if the expenses are more than the revenue, it's called a net loss, okay? Now, there are companies that do run a loss every couple of years. It is not unheard of. Now, the example I'm going to give you is, let's say you spent $300 in beer and it was a rainy night and security campus police was out, Delhi PD was out, the sheriff's department was out. You couldn't throw a party if you tried. So let's say you only had, say, 50 people show up at $5 a head. Well, let's see. You're only making, let's say you had 10 people show up at $5 a head. So let's make the math easy. So you earned $50, but you spent $300 on beer. Well, now you didn't make any money because you spent more than what you earned. So in this case, you would have a $250 loss. And that's without having somebody come in to clean the house after those 5 people made a mess of it. So when I tell you guys in accounting to try to relate accounting to your personal lives or things that you can relate to, you'll hear me give examples like this, stupid examples like throwing a party or 30 racks of beer or growing something, whatever. The key that I'm doing there, and I'm not saying that every college student is the same. There are some college students that don't partake in things like that. Personally, I know when I was in college, I did. So I'm no different than some of you guys. The point here is that if you can relate it to things that you enjoy or things that you understand, you'll do better in this class. So, it may be a big joke, ha, he's talking about a party. But the point of that is because it'll actually stick in your head. So keep that in mind. So I want you to move to slide 7 now. And what I want you to realize is I'm going to go over the statement line by line. Now, you're going to say, this is really boring, Brian. This is really, really, really boring. You're boring us to death. Well, I can't tell you how many times when we had in-person classes that I would do the same exact example. and I would do the same exact type of lecture I'm giving you guys. The best part about the lectures online is that you can replay these over and over and over. You can skip the certain parts and actually review the parts where in class you don't get that. The difference between the in-class thing is I'm doing this instead of just lecturing it once. In class, I'm lecturing it 2 or 3 times. So instead of having the ability to go back and listen to the lecture, I was doing it 2 or 3 times in class. All right, so we talked about the first part, and I'm going to restate this. The top 3 lines on your statements are what we call our heading, okay? If you do not put a heading on your financial statement, you're technically not doing the statement correctly. The headings are going to be the same format for all 3 statements that you're working on. And what I mean by format is the first line will be the company name that you're doing. The second line will be the statement that you're preparing. So in this case, we're preparing the income statement. So you're going to write income statement or type. The third line will always be whatever form of date is that company or that period that you're working on. So for this case, we're working on for the year ending December 31st. All right. That is what we consider your heading. And that is an integral part. If you do not put that on a financial statement, you technically have not done your statement correct. So please make sure that you do put a heading on every statement that you do. It's not a difficult concept. It's a pretty easy one. So just instead of losing stupid points, just throw it on there. Just do it. It's nice and easy. All right, so we do know that our income statement is our revenue and our expense accounts. So the key here is that we start off the first line that you see there, it says the word revenue. Now you're going to say to yourself, well, my revenue account is not called whatever. The dark lines that you see, the bold-faced print where it says revenue, expenses, total expenses, income before income tax, and net income, those are lines that you need to put on your financial statement. There may not be anything listed under them. Okay? You may not have a number associated with them, but those are our categories. Those are our classification categories. And I want you guys to get in the habit of writing them on there. So on this income statement, we first start off with our revenue. Our revenue, in this case, in this example, this company had what we call service revenue. So as you see below revenue, we've got service revenue listed. And all the way to the right-hand side, all the way to what we call our right-hand column, you see the amount of service revenue that this company earned for the year ending 12/31/13. Okay, so they earned $10,000 for the year. The next line, there is no other revenue account for this company, so then we move on to our expenses. Now you're going to write the word expenses, okay? I said this about the revenue, you're going to write the word expenses. Now right below the expenses, you're going to see this company had 3 different types of expenses listed. Now, when you list your expenses, it does not, and I repeat, does not matter what order you put your expenses in, okay? This company just has theirs listed in the descending order of the amounts, meaning rent expense was their biggest expense, which was $3,500. Salaries expense was their next largest expense of $18,000, and then advertising expense was their least costly of $600. Now the next line, you see the word, it's in black, dark black, and it says total expenses. So when you see the word total, that should automatically say to you in your head, you're going to add a bunch of things up. So either on a 4-function calculator or your cell phone, I want you to go ahead and see how we came up with the $5,900 that they have listed there as total expenses. As you're doing that, I'm going to tell you that you're going to add up the $3,500, the $1,800, and the $600 to get $5,900. So this is where it kind of becomes a little boring because you're going to sit there and say, oh man, he's making, just do it, please. It's going to make your life easier later. So if you add those three up, you should come up to the $5,900. That number is put all the way to the right in the right-hand column. The next line, and these are lines that you're going to have to try to remember, and it's a lot easier for you guys doing it online, this course online, because I'm not going to be standing over you giving you your exam. You're going to be taking it online, which means I have no way of knowing if you have your notes out in front of you or not. So this line is what we call our income before income tax. Okay? And the way we get to the number of $4,100 is you're going to take your $10,000 revenue and you're going to subtract your expenses. So in your calculator, if you take $10,000 minus $5,900, you will see that you should come up to $4,100. Okay, does everybody see where that comes from? Good. The next line. Now, this is the only expense that will not be listed under the expense category. Income tax expense always gets put below income before income taxes. I understand that it has the word expense at the end, which normally would make you guys move it up under the expenses. But because it's a particular type of an expense, and this is one of the only ones that is separated out, you just have to pay attention for this. So income tax expense of $150 would be given to you. And you can see that it's just listed straight over there onto the right. And then your last line, you can't really fill in your last line until you know whether you made money or lost money. So in this case, you take your income before income taxes of $4,100 and you are going to subtract the income tax expense of $150. That's going to leave you a positive $3,950. If that number is a positive number, then you have a net income. If that number is a negative number, then you have the other part, which we don't want, which is called a net loss. So for this company, they actually made money, and they made $3,950. Now, what I want you to do is I want you to just go over this statement, look at it, and understand what you're doing here. You're taking your revenue and your expenses, the bottom two types of accounts under ALSDRE, and you're using them to prepare this statement. Now, this statement's important, and I told you you work from the bottom up because every statement is dependent on the prior statement. The number that you're going to need to take off this income statement and prepare the next statement is going to be the net income amount. Now, the one thing I'm going to do is I'm going to do individual videos for the income statement, the statement of retained earnings, and the balance sheet. So that this way, if you guys are having any trouble with one particular statement, you won't have to listen to a 60-minute video. You could go straight to the statement you're having a problem with and listen to that video individually. So what I'm going to do is I'm going to stop this lecture here. This lecture covered pretty much slides 5, 6, and 7 under chapter 1. This is all about your income statement and the difference between net income and net loss. The items that are on your income statement, which are your revenue and expenses. And the key here is I need you to understand that slide number 7 is a template of what you're going to be preparing. So when you prepare your first income statement this week, your income statement should look very similar to the one here in your notes, in your slides, which is called the Willow Corporation. So yours, whatever that company is called, should look very similar to this one. So please make sure that as you're doing these assignments that are going to start coming very fluidly, that you're following along with your slides. These slides are your notebook. These slides are your textbook. These slides are important to you. These videos are only here to supplement them. So if you're choosing not to follow along, you are going to be lost, okay? As I'm sitting here doing this video at 5 a.m., I know that in 2 hours I'm going to be up listening to my son's Spanish class online. So I'm trying to teach him the same thing I'm teaching you guys, and have you guys understand that listening to this video and following along in the slides is going to be key for you to succeed in this class. All right, so income statement, signing off, and we will be having the statement of retained earnings and balance sheet coming up in a few minutes. See you then.